This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial endowment expert, Harold Siegel. We're taping our show on Thursday, February 1st, 2018. The telephone number to connect with Harold is 1-800-432-1022. His website is rarecoloreddiamonds.com. It's Super Bowl weekend, and we are so excited. Harold's Patriots playing Philadelphia. We'll talk about that later in the show. By the way, Harold did have some dental surgery, and he's recovering from it, but being the trooper that he is, he's here for today's podcast. U.S. dollar at 89.03 as we start the program today. It has popped down a little bit. Canadian dollar at 81.17. Gold 13.39, silver 17.08. Gold silver ratio has gone up. It's at 78.40. Platinum 9.94. Palladium 1,023. WTI 65.40. Brent 69.57. Nat gas has pulled back 291. Bitcoin in the United States. We'll talk about Bitcoin in the program. In U.S. dollars, $9,325. Canadian dollars 11,505.75. And as we start the program today, the Dow at 26,068. S&P 2820. The TSX in Canada 15,951. The Nasdaq 73.91. And the big story of the week, we had a couple of different issues, one of them being the Federal Reserve in the United States. It was Janet Yellen's last meeting as she was not rehired by Donald Trump. Janet Yellen's last Federal Reserve meeting produced a unanimous decision to keep rates unchanged. Well, setting up a likely interest rate increase at Jerome Powell, and he's the new Fed chair, his first meeting as chair next month, with future markets projecting the odds of the latter as a done deal. The addition of the word further twice to the statement released with decision yesterday, it reinforces expectations for multiple hikes in the United States this year. One of the other stories was the U.S. dollar. And it's interesting that PIMCO, Pacific Investment Management Company, came out and said that the United States is fighting and winning a cold currency war, attributing the 12% decline in the dollar since the start of 2017 on fiscal and monetary policy as well as rhetorical barbs. The ECB executive board member Benoit Courier warned yesterday that volatility in foreign exchange markets could lead to an unwarranted tightening of monetary policy that the bank would have to reassess and consider. Well, the dollar edged higher in trading this morning as we're taping. The Bloomberg Dollar Spot Index remains near its lowest level since 2014. And one of the things that really caught Harold's attention, and we'll touch on it here briefly and let Harold comment, U.S. President Donald Trump delivered his first State of the Union address, saying the United States has arrived at a new American moment of wealth and opportunity. There was little of the president's trademark antagonism in the speech as he made a bid for a bipartisan tone, promising to unify the company. His opponents did not think he went far enough, with some grumbling and booing among Democrats in the Congress during the speech. There was little policy in the address for markets to latch onto. As a result, the dollar went down. But Donald Trump came out and mentioned as well, we talked about it on the podcast last week, they were jawboning the dollar down in Davos, and he declared the dollar would continue to strengthen, and that remarks made by Treasury Secretary Steve Mnuchin suggesting support for a weaker dollar the day before was taken out of context. Trump said the dollar is going to get stronger and stronger, and ultimately I want to see a strong dollar. And he had that comment at an interview at the World Economic Forum in Davos, Switzerland. But Harold, you were not impressed with the State of the Union.
No, I'll tell you something. All the clapping and the standing up tends to get on my nerves after a while. And again, knowing Donald Trump, I just thought that he's obnoxious. I mean, just watching the State of the Union, where you've got the Republicans on one side clapping at every single thing that he says and standing up, and then you had the Democrats on the other side that were so stone-faced and hating everything that he's done. You know, the thing is that a lot of what he said is exaggeration. The tax bill, where it should, really help the economy, I'm just not so sure how much it's really going to help the economy. And he's flip-flopping. On one hand, he's bringing the U.S. back into manufacturing, which is why he wanted a lower U.S. dollar. So why is he coming out now and saying that the dollar is going to strengthen? It totally offsets what he was saying. If he's bringing manufacturing back to the United States, if he's going to bring Detroit back and the car industry back and all of that, like he was saying, he would want a weaker dollar because we're going to export, just like Canada wanted a weaker dollar. So the Canadian exports would be cheaper and the economy would do better. But now he's coming out and saying that the dollar is going to strengthen. So gold has been reacting to a weaker dollar. There's a direct correlation between gold and the U.S. dollar. There always has been. And as the U.S. dollar has been weakening, gold has been going higher. There is minor resistance in gold at 1350. We hit a high at 1345 this morning. We've been to the 1350 level. The big number for gold is 1380. We need to see two closes in a row above 1380, and then we would confirm that we're in a new bull market in gold, and that market could really take off and run, especially if the U.S. dollar continues to fall. Now, I always felt that the U.S. dollar had to strengthen because they're raising interest rates in the United States. They didn't do it this time around, but when they changed the Federal Reserve chairman around, they are going to raise interest rates again. Normally, you would raise interest rates to strengthen your dollar and to fight inflation. Well, we all know there is no inflation at this point. Even though oil prices have been moving higher, it's still not high enough to cause any type of inflation. Food prices haven't increased enough in order to have inflation. So the fact is that why raise interest rates at this point? If you're going to raise interest rates, the dollar will inch higher. But if the policy is for a weaker dollar to make the U.S. exports look stronger, then we have to change a little bit of direction here. Gold would really come into play. If the U.S. dollar is going to fall, which I still find it hard to believe that it will, but if it was to fall and stay weaker, we have to look at gold as a hedge against the U.S. dollar dropping and the potential for gold to break out. Don't forget, we caught an 11-year bull market in gold. We made a fortune in that market. We caught gold at $250 and rode it all the way to the top of 1920. After the exchanges decided to make it so expensive to trade gold and raise the margin requirements back in 2011, gold has been trading at a range ever since that time. The emphasis has obviously been on getting the U.S. economy back on track, getting the stock market strong, which it certainly has been, and that type of thing. But as we're looking at the markets right now, gold, if it broke 1380 and the U.S. dollar remains weaker, we could get a breakout in gold back up to 1600. Then you've got geopolitical situations happening. And geopolitical situations like Iran and North Korea and those type of scenarios can certainly add fuel to the fire, and gold could really take off again. So, again, the important number for me, short term is 1350, but that's a minor resistance level. The major number is 1380. Two closes above 1380 tells me that we're back into the beginning stages of a bull market in gold, and that gold market could, depending on the situation, come back and take out that 1920 level. Now, don't forget, when gold hit $1,920, the U.S. dollar was down at 72 cents. So when the gold market started its rally, when gold was at 250, the U.S. dollar was the strongest currency. So there's that correlation, a strong U.S. dollar, weak gold. But during that period of time from 2000 to 2011, the dollar went from the strongest currency to one of the weakest currencies. It fell all the way to 72 cents from $1.10, a massive drop in the U.S. dollar, which is why gold went from 250 to 1900. It was because of the extreme move of the U.S. dollar. Now, what we've seen since 2011 is basically 6 or 7 years of a sideways moving market in gold because nothing much was happening with the currency. The U.S. dollar was trading within a range. When President Trump came on board, the U.S. dollar strengthened. We actually went up to 103. Now we're down to 88 cents, is it, Randy? 89 cents. So we've seen a big change in the dollar. The dollar is going to determine what's going to happen to gold, along with any type of geopolitical situation. So again, we're starting to look at gold now as a very serious opportunity to make an awful lot of money again. We caught that whole gold run from 2000 all the way to 2011, and a lot of our clients made a fortune of money. It would be an amazing opportunity if we got another opportunity to get into another bull market in gold. And again, the key to that is what's going to happen with the U.S. dollar.
Connect with Harold. Learn about investing in hard assets, diamonds, gold, silver. His website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can speak with him personally and privately, 1-800-432-1022. We do the podcast every week. We have our free weekly newsletter. And one thing I've really focused hard on putting the newsletter together is you can go through that newsletter in 5 minutes and be completely up to date on the financial markets for the week. You can spend hours if you want to digging through all the information, but get our free weekly newsletter from Harold. Go through it on your smartphone, tablet, whatever you have, and you can do it in a matter of mere minutes. And you're going to be very interesting at a party instead of really boring. So there you go. But connect with Harold and get our free weekly newsletter, 1-800-432-1022. One of the things that we've continued to follow is Bitcoin. And Bitcoin is something that at this point in time is not going away, but has pulled back very, very dramatically. For cryptocurrency investors, January is turning into a month of hell. Digital coins have mostly slid, with Bitcoin heading for its worst monthly decline since February 2014, as U.S. regulators ramp up their scrutiny of one of the world's largest digital currency exchanges. Well, Facebook is banning ads tied to the industry, so that will definitely not help. Bitcoin is down about 30% in the month of January, and the trading at the sort of the last day was 10,172. We mentioned off the top of the program today, it's at 93.25, so it's pulled back even a little bit more. Now, it's interesting to note that rival coins Ripple and Litecoin have respectively slid about 45% and 29%, while Ethereum has managed a 47% increase. The four coins were little changed on Wednesday. Now, the U.S. Securities and Exchange Commission obtained an order freezing assets of a Texas-based initial coin offering that claimed it had raised more than $600 million. The order filed in the federal court in Dallas halts a Rise Bank from raising any additional cash from investors, according to a statement from the SEC Tuesday. The agency alleges Jared Rice, 29, illegally raised funds from individual investors beginning in November without registering with regulators. Now, here in Canada, Canadians trading Bitcoin shouldn't hold their breath for specific rules on how it will be taxed. The Finance Minister, Bill Moreau, spoke on the sidelines of the World Economic Forum in Davos, said Canada isn't planning changes to its existing tax code to deal with cryptocurrencies, but some observers say the rules leave too much room for uncertainty about Bitcoin, which in Canada can essentially be treated as money, a commodity, or even income. We don't have any specific Bitcoin or cryptocurrency overhaul in the works, Morneau told Bloomberg. The main focus on Bitcoin is making sure that we understand what's going on underneath that market to make sure that we aren't introducing any risks into our economy, whether they be risks like money laundering or terrorism financing. And that seems to be a big, big concern. Authorities around the world are worried that cryptocurrencies could become tax havens, and it's already happening. David Drake, whose New York-based family office has more than 10 million in cryptocurrencies and blockchain investments, he's using digital money like an offshore bank account, a place to legally park overseas business profits and reduce U.S. taxes. Now, the British Prime Minister Theresa May and Indian Prime Minister Modi are among the world leaders who have expressed alarm at the rise of virtual cash to move money overseas. And they're very concerned about this becoming a tax dodge, and that's something obviously Canada has to take a look at as well. Something rather controversial, I thought. Norda Bank and they're out of Sweden, has banned staff from owning cryptocurrencies. And the union for that bank is saying, is this legal? Can you do this? Can you actually stop an employee of your bank from owning an investment? They have, and they may get challenged on it, so it will be interesting to see how that plays out. It's a story we will watch. And Harold, we talked about cyber security in the past, making sure that your iPhone is up to date and that your iPad and your iMac is up to date for security reasons, the latest software. And one of the reasons you want to make sure that if you're on a PC that you have proper protection. At 2:57 a.m. on Friday morning in Tokyo, someone hacked into the digital wallet of Japanese cryptocurrency exchange CoinCheck and pulled off one of the biggest heists in history. 3 days later, the theft of nearly 500 million in digital tokens is still reverberating through virtual currency markets and policy circles around the world. Deutsche Bank coming out and saying they do not advise to invest in cryptocurrencies. They say they see problematic issues, including high volatility, possible price manipulation, and data loss or data theft. We do not recommend that only for investors who invest speculatively. They say, obviously, you could maybe take the chance. There is a risk of total loss. Harold, this is something that we're keeping an eye on because we really want to keep our podcast listeners up to date. This is an interesting issue. And what are your thoughts about a company saying to somebody, this bank, saying, no, you can't own cryptocurrencies if you work for us?
My feeling on that is similar, because as I had a very large brokerage firm, commodity brokerage firm, and I would not allow my brokers to trade for their own account while they were trading for clients. So, but that was more of a conflict of interest type of thing. When you're involved in a market like that, you can get emotional because, let's face it, Bitcoins have been from $10 to $20,000. Now they're down to $9,000. You're talking about something that is so volatile that it can affect your daily thinking if you're in that market, because if you're losing money, you're not thinking about your job. On top of that, when you're in a situation like that where you're trading for your own, and are you really looking after your customers correctly? And most of the time, because of the emotion of trading for your own account, the answer to that is no. You're going to be more concerned for your own account than you are for your clients, and that's not the right thing to do. It's unethical. So with my firms, even though we are in the biggest bull market in gold, I would not allow my employees to be trading for their own account during that particular time. Now, the fact is also with these cryptocurrencies, they're going to be here for a long time. It's the new wave of trading, and realizing that there's so few investments out there today that are lucrative or give you a chance to get rich. People are going to trade them. The problem with the cryptocurrencies, in a lot of cases, a lot of people don't understand them, but they're attracted to them because of the tremendous volatility and the opportunity to make a lot of money. We talked about Bitcoin really pricing itself out of the market at $20,000 a coin. A lot of investors couldn't afford that anymore, just like they can't afford the stock market at $26,000. But these cryptocurrencies are not backed by anything. And that's where the problem is that you're really just trading air. It's nothing but speculation. When a market like Bitcoin can go from 20,000 to 9,000 in just a few days, that's a problem, because it's a very volatile and risky market that most people that are going to trade that market are going to lose all their money and get into trouble. So the fact is that these cryptocurrencies are not backed by anything. Now, you can say the same thing about a fiat currency like the US dollar or the Canadian dollar or any currency, because currencies are not backed by gold anymore. What they are backed by is the good faith of the government that prints that currency. So in the fact of Canada or the United States, when you've got a $100 bill, you know that you can cash that $100 bill and somebody's going to accept that $100 bill because they believe that the government is stable enough to make good on the currency. But the fact is that if that country fails and their government fails, excuse me, the currency fails also. And we have seen that in history, from time to time. The ideal situation would be a cryptocurrency that is backed by a hard asset, like gold or diamonds or something along that line. That has not materialized yet, but that would be the best possible scenario to invest in a cryptocurrency if it was actually backed by something substantial as opposed to just air, and that could be coming within the very, very near future. So again, it's an interesting new concept. A lot of people find it very difficult to understand. The volatility in that cryptocurrency market is the most extreme I've ever seen. And now that they're talking about trading it on the futures market, makes it even more volatile. So again, it's not something for the faint of heart. It's not an investment for most people. But if you're a speculator and a risk taker, there are opportunities to make money in the cryptocurrencies.
One of the things that Harold talked about in the past is General Electric. And it's interesting to note, General Electric is in big trouble. And Harold has always warned us about GE when it comes to a hole in their balance sheet, a $15 billion shortfall in insurance reserves. It was disclosed last week. It prompted a Security and Exchange Commission investigation, called into question the oversight of GE leadership, pushing down the share price, and shocked investors who were asking how this iconic company, American capitalism, could allow the situation to deteriorate to this point. It sure seems that previous management had a very rosy view, according to Scott Davis, who's an analyst with Melius Research in New York. There seemed to be no effort on their part to get ahead of the liability. I find it very hard to believe that mysteriously overnight, GE found problems that they did not know existed. But the trouble at GE began decades ago when a hole started to form inside their financial unit. The hole became $15 billion in shortfall in insurance reserves. Their past CEO just retired, Jeff Immelt, and people have been asking to speak with him, and he's saying no comment. Harold, you've warned us about GE for a long time, but just imagine that, waking up and finding out $15 billion. That's a lot of money.
Don't forget, in 2008, General Electric stock dropped from $80 to $5 because most people think of General Electric as an appliance company, but in all honesty, they're a credit company. So they really have fallen by the wayside, never ever recovered really from 2008, and are on the verge of bankruptcy. So that's shocking because they were such a massive firm for such a long time. You know, that's a concern to see a company of that size going under.
I don't know how they're going to come up with it because their profits seem to be, at this point, very minimal. They have a new CEO, and his hands are going to be full, to say the least. Connect with Harold at rarecoloreddiamonds.com. His website is rarecoloreddiamonds.com, 1-800-432-1022 to speak with him personally and privately about hard assets. It's Super Bowl weekend, and Harold and I, we cannot wait for Super Bowl Sunday when the Patriots play the Philadelphia Eagles. It should be exciting. Here in Canada, more bad news regarding the housing market. Wanted to pass this along. CMHC, they actually are the people that take care of insurance for mortgages, say national housing market is highly vulnerable for the sixth straight quarter. Some centers in BC and Ontario are still highly overvalued. Canadian Mortgage and Housing Corporation say the country's housing market remains highly vulnerable overall for the sixth quarter, with evidence of overvaluation and price acceleration, despite some improvement seen in Winnipeg and Saskatoon. In its latest quarter, they actually go on to say they found the housing market in Toronto, Hamilton, Vancouver, and Victoria continue to be highly vulnerable due to price acceleration and overvaluation. Our market assessment continues to show a high degree of vulnerability for the housing market at the overall national level because of the combination of price acceleration and overvaluation. And they actually go on to say that they see evidence that there's overbuilding on a national level, but added their concerns around overbuilding in Calgary, Edmonton, and living in Edmonton, I know that very well. There are buildings going up, one near where I live, and we all say to ourselves, who's going to be who's buying these places? We can't figure it out. Who's buying them? Also Saskatoon and Regina. So the Vancouver market remains highly vulnerable, and it's a situation where the only really good market, they say, is Manitoba, Quebec, and Atlantic Canada, and they're rated as showing low vulnerability. But that is a concern for people in Calgary and Edmonton, Saskatoon, and Regina, the overbuilding, and at some point the excess is going to take quite some time to burn off. In the meantime, I know my place that I own, it was assessed here recently by the city of Edmonton, and a chunk lower. Let's just put it that way. So, Harold, you can see what happens when you get into markets like we are seeing across Canada. People have to be very careful when it comes to investing and buying in this marketplace today.
And if they do raise interest rates in Canada again, and we've talked about this for a long time since they've been doing it, it just makes no sense. I just don't understand for the life of me why raise interest rates when there's no inflation, when you want a weaker dollar because it helps Canadian exports. Lower interest rates will certainly help the citizens of Canada because their debt levels are so high, highest in history. So why raise interest rates and make it more expensive when the economy is just not doing great? So on top of that, as you mentioned, Randy, the real estate market is in disarray, and higher interest rates is certainly not going to help the real estate market. So I just don't understand these politicians, what their agenda really is. They're supposed to be for the people, to try to help the people, live a better life, make more money, be more secure. That just doesn't happen in the U.S. and Canada at this point. It's a very frightening time.
Harold's website for diamonds is rarecoloreddiamonds.com. In our newsletter, we have a quote from Chris Delgado, a jewelry expert. Jewelry is an investment you can wear for 30 years and then sell. What else can you do that with? And as well, a quote from Joseph Lipton, CEO of Secured Worldwide. Diamonds are a portable alternative store of savings and wealth that are being increasingly utilized for diversification. And in a new and uncertain world where surprises will continue to catch us off guard, portability should absolutely be understood as diversification. The ability to easily move savings and wealth is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. They are arguably the densest and most portable form of savings and wealth in existence. Real estate is fixed, and 1 million worth of gold weighs about 10 kilos, as much as a large car tire, but a handful of collectible, collection quality diamonds can be worth millions and fit in your pocket. And if you would like to learn more about investing in diamonds, hard assets, speak with Harold personally and privately, 1-800-432-1022. His website is like a museum online for some of the rarest, naturally fancy colored diamonds, rarecoloreddiamonds.com. And Harold, I was looking ahead to some of the action that's going to be coming up with Christie's and Sotheby's and their auctions, and mainly at this point it's going to be in April when they start up again. We will be keeping an eye on that. Was there anything that happened in the world of diamonds, or any thoughts on diamonds this week?
We've got some diamonds going up to auction around the end of this month. They're amazing diamonds that we've actually cut ourselves. One of them is a flawless green that we put into a beautiful ring surrounded by 2 vivid pink diamonds. That will be coming up for auction. It's just coming out of its tour of Europe and Asia. And then on top of that, we have a red diamond ring coming up for sale, which is magnificent. It's about a half a carat. We have a beautiful orange diamond coming up for sale, diamond ring, and we've got 2 pinks. So we've got some magnificent diamonds coming up at World Auction, coming up by the end of this month, and we'll keep you updated. We believe that our 1 carat fancy green flawless diamond is the only one in the world today, and we believe that that diamond could actually sell for close to $1 million. We are very interested in gold again. Gold could take off. We're very close to breaking 1350. If we break 1380 and get 2 closes above that, we're going to want to own gold. Gold could take off. There's geopolitical situations, there are currency problems, there's things happening in the world, and again, there's not a lot of confidence in the United States in this president. I think that he's a loose cannon. I don't believe a lot of the things that he said was true in the in the State of the Union address he gave the other day. He's got a lot of enemies and a lot of people that are just not on his side. So I think we really may have to start to look at gold again as a potential market that could take off and make us a lot of money. So I'll keep you updated on that. Again, the diamond market is very strong at this point because there's not a lot of investments out there. As I mentioned before, Bitcoins are just not for everybody. In fact, they're not for most people. They're very volatile, very speculative, and at $20,000, they priced most investors out of that market. That's why the market's back down to 9,000 at this point. There's just not a lot of great investments out there today. The stock market is another thing. At 26,000, it's just too expensive for a lot of investors. So you're really going to have to keep your eyes peeled for something strong, longer term that is not volatile, and rare colored diamonds certainly fall into that category.
Speak with Harold. Call him at 1-800-432-1022 if you'd like to invest in hard assets, gold, silver, rare colored diamonds. 1-800-432-1022. His website is rarecoloreddiamonds.com. And Harold's spot on. This week we saw not only the stock market at times taking a hit, the bond market as well. They're both getting hit. And at that point, where do you go? As we get to towards the end of our program, a couple of interesting notes, quick hits here for you. Wealthy Londoners are leaving the city as new taxes make it expensive to inherit and invest, and as Brexit prompts rich Europeans living in the UK capital to return home. You don't think taxes matter? Yes, they do. High net worth individuals are leaving, finding better jurisdictions. That is something that all countries should be aware of. A Hawaiian state worker mistakenly believed a ballistic missile attack was underway when they sent a false alert that rattled residents for 38 minutes until officials could find a way to send a correction. You would think they would have a fail-safe in place. If there was a problem, maybe the person would pick up the phone and go, "Hey boss, before I hit the button, are we okay to hit the button?" And that's something that did not happen. Children returning to school after the winter holidays appear to be sharing more than just new toys. They are driving influenza infections to levels not seen since the swine flu pandemic of 2009. The flu season is really, really serious. 50,000 Americans will be dead. Also on the weekend, Ingvar Kamprad. He's the man who started IKEA. 91 years old, a net worth of $58.7 billion. He was the world's 8th richest person. He passed away. Strangely enough, shares the same birthday as I do, March 30th. And as I joked, his coffin came pre-made. They didn't have to assemble it. So, but yes, we raise a glass of Lincolnberry juice to Ingvar Kamprad for developing IKEA. People love IKEA. Because the world is getting warmer, it's getting colder too, crazy as that sounds. There's an explanation in the northernmost corner of the planet where temperatures are rising twice as fast as anywhere. That affects the jet streams churning through the upper atmosphere and results in more weird weather cold snaps. Most and more frequently and persistent bouts of severe and unseasonal weather are in most everyone's future. In a report that we have in our free weekly newsletter, I encourage you to get it from Harold. Also, brawls broke out in a French supermarket. I have never tried Nutella. Have you ever tried Nutella, Harold?
Yes, I have.
Well, they put it on sale in Paris, and all hell broke loose. There was a big fight, and it was on the internet. Somebody videotaped people fighting over Nutella to save a few dollars. Also, growing concerns about a possible nuclear war and other global threats have pushed forward the symbolic doomsday clock by 30 seconds to just 2 minutes before midnight. And finally, it is a big weekend. Super Bowl weekend, and Harold is so excited his Patriots are in there. Think about it, they've won 5 Super Bowls, been in 10 Super Bowls. Brady and Belichick going for number 6. Nate Silver, who is well known for projection models, is giving the Patriots a 58% chance to win the Super Bowl. Madden Football ran simulations of the game, and New England beat the Philadelphia Eagles 24-20 in the simulation. So these simulations are eerily accurate and were very accurate last year as to how the game played out when the Patriots came back and beat the Atlanta Falcons. But good luck to your New England Patriots. I know it's going to be one exciting weekend for you.
It's going to be a great game. Philadelphia's got a great team. Patriots got a great team. 170 million people will be watching from all over the world. It should be phenomenal. So very excited. I started backing Patriots about 18 years ago when Brady came on board, being that I'm from Toronto. The only U.S. college team that I really followed was Michigan, so I just sort of kept up to date with it. And when I saw this guy Brady, I liked him. I thought he was an amazing player, and he just turned out to be my favorite player. And I was just fortunate to be riding the Patriots bandwagon for the last 18 years. And we all know what it's like to support a team that we love. I've been a Toronto Maple Leafs fan for all of my life, for 64 years now. I used to go to Maple Leaf Gardens as a kid and see Johnny Bower and Frank Mahovlich and Davey Keon and all the guys play. And I played hockey up until I was 45 years old, even down here in Florida. I played hockey when I was a kid with Bobby Orr and Brad Park. I went to Jim Pappin's hockey school when I was 10 years old, and I played hockey. And Bobby Orr and Brad Park were the two junior instructors. So, I've always been into sports, love sports, very excited about this weekend, excited about Canadian hockey. The Toronto Raptors are doing very well again. So, all is well in the sports world, and all we want to do is see our clients do well financially, with some of our calls. I think we've got some very exciting markets coming up, Randy.
And as a Green Bay Packer fan, all we sit back and say is, they actually play the game without us? Next year, we're in next year territory, but I can't wait for the game. It is going to be so exciting. Harold, thank you for another great podcast and your knowledge. Good luck to your team.
Well, thank you very much, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at 1-800-432-1022. Get our free weekly newsletter, the companion to the podcast. You can go through it in minutes, be completely up to date. As I was joking, you won't be boring at cocktail parties anymore. You'll have all these amazing figures at your fingertips. And take a look at rarecoloreddiamonds.com and some of the investment quality diamonds that Harold has. It's like a museum online. rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report podcast. My name is Randy Marshall. For Harold Siegel, we will talk to you next week.